Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. Tesla is one of those stocks that you really need to read between the lines to understand. You really need to get into the weeds to get the real data, possibly draw a few inferences, and maybe have a little faith. It's been a difficult journey, fighting narratives from supposed credible sources that, if they are right, will mean you potentially lose your entire investment fund. They used to tell me there wasn't enough demand for Teslas. This was for the Model 3, but I did as much research as I could to draw my own conclusions. I did first-hand research. I joined Facebook groups of owners and talked to the owners. I wanted to know what people really thought of these cars. Oh, and this was after we'd already been through production hell, having the CEO sleep on a couch in an office in the factory to make sure he could get mass automotive production right without any serious experience. I remember at one stage, Tesla was having robots flown in a plane to Fremont from Europe at the cost of hundreds of millions of dollars because the robots were required there that urgently. Tesla even had to build a tent to facilitate the production. It was not a great time. But according to my research, the Model 3 was an outstanding product. Well, the Model S and X were incredible too, of course. I mean, I believed in the company from the original Roadster and always wanted to be a part of it as soon as I was aware of its inception. But again, we're back into the weeds. We have to do detective work. There is no advertising, no PR department, no CEO talking the company up to prop the stock price up. No, the analysis is left to you. Right now, the next stock price cycle is all depending on the 4680 batteries, Texas and Berlin. We're currently in limbo and biding the time until these events start taking some serious action. We estimate the capacity from these activities could literally triple or quadruple. To put that in perspective, imagine if Apple was about to sell 3 or 4 times more iPhones. It would be a big deal. If the media were legitimate, with real analysts, wouldn't they be talking about this potential? Wouldn't we be hearing Jim Cramer saying, Tesla could have 3 times the capacity? I say capacity, not sales, because it's actually more like 6 to 8 times as many sales as last year. Why don't any analysts talk about this? The math is very simple. My 7-year-old daughter can even understand it. Current capacity for Fremont and Shanghai, according to Tesla, is 1.05 million units a year. We hear that Texas and Berlin will each have an estimated capacity of between 1 and 2 million each. If they're both 1 million, that takes total capacity to 3 million. 1 million to 3 million is 3 times as many. And Tesla did 500,000 units last year. That means 6 times the potential deliveries. But if they both had 2 million capacity, then that would take the total capacity to 5 million, i.e., 5 times what Tesla currently have now. Why is this not the narrative we hear? Why do we just continually have to hear about Tesla and their profit from regulatory credits? Why doesn't anyone talk about the bigger picture? They're so small-minded or narrow-sighted, they can't see the forest for the trees. And a lot of you may say, the media doesn't affect the stock price or affect your decision to buy shares, but if they suddenly started getting excited about Tesla quadrupling their sales in the near future, then it would give a lot of shareholders more confidence to buy more shares, and I would say it would also affect the stock price. But anyway, everyone is so distracted with these activities, they aren't focusing on what's happening with the company under their nose. I talk about Tesla potentially multiplying their capacity, but that's Tesla's claimed capacity. As far as I can tell, Tesla are quite possibly going to exceed their capacity with their existing factories in Shanghai and Fremont. In December, Tesla sold 24,000 Model 3s in China, 23,000 in January, and over 25,000 in March. All of these months are over the alleged 250,000 a year capacity when scaled up. In fact, we're talking closer to 300,000 compared to the claimed 250,000. Remember, Tesla give capacity numbers, not production numbers. This means if any month exceeds the alleged capacity, then that means the capacity is higher than they say. It's not an average spread out annually. No, if any month exceeds the monthly capacity, then it's the same as exceeding the annual capacity. Model Y China claimed capacity is 200,000, but in April, supposedly the line was down for half the month, and we still had over 8,000 Model Ys, implying perhaps there would have been 16,000 for the entire month, which is 192,000 scaled annually, which means Tesla have just about hit their alleged capacity within just a few months of ramping up, which is unbelievable. No, I mean that literally. I don't believe that 200,000 is the capacity. For starters, that number was given before the gigapress came into play too. Therefore, I see no issue this factory also exceeding capacity by a further 50,000 units a year, just like the Model 3 factory. But because of the other advances in Model Y production, along with gigapresses, then maybe they even exceed it by 100,000 a year. But just to be a little bit on the safe side, let's split the difference and say that the true capacity of Model Y Shanghai is 275,000 a year. Now Fremont is actually not yet at capacity. Tesla is still ramping up the Model Y there too. I estimate that Fremont is producing around 50,000 Model 3s a quarter. That would come to 200,000 a year. Their claimed capacity is 500,000 Model 3s and Ys. Last quarter, Tesla delivered around 50,000 Model Ys from Fremont, implying there is still another 25,000 a quarter potential. Of course, this capacity was also set before we had the gigapresses, so we could possibly assume an additional 20% more here too. In other words, the claimed capacity for Model Y at Fremont is possibly 75,000, but with the advances Tesla have made, an additional 20% would take it to 90,000 a quarter. Now, once the Model S and X are back in production, due to the extra demand of the new design, we should see production numbers back to where they were before the Model 3 launch, which was around 30,000 a quarter. Given all these numbers, I would just like to calculate a rough valuation on what this side of Tesla alone could be worth. We will be excluding the energy side of the business in this scenario, and I also want to exclude servicing, as eventually that will become a profitable side too, rather than a loss. But by the same token, I also want to exclude regulatory credits, as that is not sustainable, particularly now FCA has merged with Stellantis and no longer require Tesla's regulatory credits. We will also be removing stock-based compensation, as we're really aiming to calculate an intrinsic value here. And just for ease of calculation, we aren't going to add any of the extras like supercharging or insurance, as they're small in the scale of things. We will, however, include FSD. I'm also excluding 4680 batteries, Texas and Berlin. I just want to give people an idea of what Tesla is worth with what they've proven they're capable of right now once Model Y, S and X are all ramped up. Therefore, we're taking an annual run rate from Fremont of 200,000 Model 3s and 360,000 Model Ys, then we have 120,000 Model S and Xs. From Shanghai, of 300,000 Model 3s and 270,000 for Model Y. Using my estimated prices per vehicle that you can see here, I don't mind showing you all or sharing it. I don't bother asking you to join Patreon to access my spreadsheets. I'm happy to share them with you. Although if you wanted to hit the thumbs up and subscribe, I would definitely appreciate that. And then we have our annual delivery estimates. We can see what turnover we can expect from auto sales. That gives us $64 billion in revenue. Now, when we remove all the stock-based compensation, factor in the Model S and X cost savings and price increase, the gigapresses, and Model Y ramp up, I think we're at 28% profit margin, giving us a gross profit of autos of $18 billion. We also have FSD, which currently I estimate to be an average value of $1,250 per Fremont vehicle sold and $150 per Shanghai vehicle, which is an additional $900 million. No, not a great deal, but I'm basing this revenue on the current level of the product, as in no further FSD advances. I'm not going to do any accounting for depreciation, as it's not relevant in this scenario. These capital items have already been paid for. In this valuation, we're calculating the intrinsic value of Tesla now. Therefore, R&D expenses would be cut back significantly. It would be used to keep up with technologies rather than growth. I would therefore cut it back to $500 million. I think $2 billion a year is ample to run the company for selling, general and admin. This gives us an EBITDA of $16.5 billion. Let's say Tesla use their cash on hand to pay off as much debt as they can and are left with $10 billion of debt and are paying $400 million a year interest on said debt, leaving us with a net profit of $16 billion. I think given the current economic climate, I would feel comfortable with a PE ratio of 20. I know I'm going to get a lot of comments say it should be much higher, so I'll just clear this up. In this scenario, Tesla is not a growth company. We're just valuing Fremont and Shanghai when they reach full capacity. So we can place an intrinsic value on Tesla, or a worst case scenario you might even look at it as. Anyway, that gives a market cap of $320 billion and a share price of $334. So let's talk a bit about what this all means. Is this an intrinsic value of Tesla? Now, we have excluded the energy business too, which could be sold off, but without Tesla's battery technology, it wouldn't be worth much. At best, perhaps $10 billion. That's a very rough guess, but relatively, I don't think it has much impact on the business without the batteries. So this does, however, mean all those people who keep commenting that they're waiting for Tesla to dip below $100 before they can buy can't read financial statements. It also means that Gordon Johnson falls under this category, His price target is $67, which would imply that he is either highly incompetent at his job or has an ulterior motive. We've just gone through the numbers. I've hidden nothing, explained everything. There is no possible rebuttal to any of it. Possibly the only element that could be argued is the PE ratio. Now, if you're feeling a bit down right now on such a low Tesla valuation, then don't worry, we haven't finished drawing all the potential inferences yet. And this is where it gets interesting. If we subtract this intrinsic value from Tesla's current stock price, at the time of this video, Tesla has a market cap of $600 billion, we're left with a valuation of $280 billion, or a stock price of $290. What does that mean? That essentially means that the market has put a value for Texas, Berlin, 4680 batteries, FSD, structural batteries, AI, robotaxis, Model 2, solar, energy storage, auto bidder, insurance, HVAC, and any future Tesla models or products at a valuation of $280 billion. Given that the 4680 batteries alone will reduce the cost of batteries by half, which is approximately $4,000 to $8,000 per car, thus increasing margins by about 50%, Texas and Berlin should have 3 to 5 times the current capacity of what the existing two factories are doing, then these alone should increase the valuation by 6 times. And these aren't future plans. These are all in construction right now and nearing completion. They're going to happen. And this also excludes energy. Well, if we multiply 6 by 334, it comes in at exactly a $2,000 stock price. Bear in mind, we're still working with a PE ratio of 20. Oh, wow. What's the current PE? 630? Well, I'll leave those numbers with you and let you draw your own subjective conclusions. Thanks for listening. Please hit the thumbs up and don't forget to subscribe.